Everyone is talking about gold hitting all-time highs. But while the world is distracted by the yellow metal, something much bigger is happening in the shadows. Silver is waking up. For years, silver has been the sleeping giant of the commodities market. But in 2026, the giant is no longer sleeping. It is sprinting. With prices skyrocketing and supply disappearing from the vaults, we are witnessing a historic squeeze. Is this just another bubble? Or is silver about to outperform gold and create a new generation of wealth? In the next minutes, I will break down the math, the industrial crisis, and the dark truth about why central banks are hoarding one, while the industry is desperate for the other. Welcome to the ultimate showdown, gold versus silver. Let's start with the king. Gold is not an investment. Gold is insurance. For 5,000 years, gold has been the ultimate store of value. It doesn't rust, it doesn't corrode. And most importantly, it cannot be printed by a government. Right now, in 2026, we are seeing central banks around the world, from China to Poland to Singapore, buying gold at a record pace. Why? Because they are scared. They are scared of debt. They are scared of currency devaluation. They are scared of geopolitical conflict. When you buy gold, you are not trying to get rich quick. You are trying to stay rich. Gold is low volatility. It is the shield you use when the economy crashes. If the stock market collapses tomorrow, gold is the asset that holds your purchasing power. But gold has a problem. It is expensive. And mathematically, its potential for massive gains is limited compared to its cheaper cousin. Enter silver. The poor man's gold. Or as I call it, the opportunity metal. Unlike gold, which sits in a vault doing nothing, silver is a workhorse. It is consumed. This is the key factor driving the price explosion we are seeing right now. Silver is the most conductive metal on Earth. You cannot have the modern world without silver. Think about it. The green energy revolution? It runs on silver. Every solar panel on a roof needs silver paste. Every electric vehicle, EV, contains almost 2 ounces of silver, twice as much as a gas car. The AI revolution? The 5G towers? The advanced microchips in your phone? They all require silver. Here is the supply shock problem. We are eating through our silver stockpiles. Mines are not producing enough to keep up with this industrial hunger. For the last 3 years, the demand for silver has been higher than the supply. We are in a structural deficit. And unlike gold, once silver is used in a missile or a solar panel, it is often lost forever. It is not recycled as easily as gold. The stockpiles are draining. And when supply goes down and demand goes up, price is only one way to go. Vertical. If you are an investor, you need to understand one number, the gold to silver ratio. This number tells us how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio sits around 60 to 1. But recently, we have seen this ratio stretch to extreme levels, sometimes hitting 80 or 90 to 1. This means silver is historically cheap compared to gold. When this ratio snaps back, and it always does, silver moves like a rocket. In past bull markets, when gold goes up 10%, silver often goes up 20% or 30%. It is high beta. It is explosive. But be warned. This works both ways. We need to be honest about the risks. Silver is not for the faint of heart. If gold is a steady train ride, silver is a roller coaster in the dark. Because the silver market is much smaller than the gold market, a small amount of money can move the price drastically. You will see days where silver drops 5% or 10% in a few hours. Can you handle that stomach churn? Also, we have to talk about premiums. If you want to buy physical silver coins, like American Eagles or Maples, you will pay a high fee over the spot price. Sometimes, you might pay 20% or 30% above the market price just to get the metal in your hand. With gold, those premiums are usually much lower. So, if you are buying silver, you need a massive price increase just to break even on the premiums you pay. This leads us to the great debate, paper versus physical. Most of the price you see on TV is the paper price. It's based on futures contracts traded by big banks. Many investors believe this paper price is manipulated to keep metals cheap. But when a real crisis hits, like we saw in past financial crashes, the paper price might drop, but the physical price disconnects. You might see silver trading at $30 on the screen, but try to find a real coin for less than $40. You won't find it. In a world of digital illusions, holding the physical metal is the only way to eliminate counterparty risk. If you hold the coin, you own it. No bank failure can take it away from you. So, which one wins in 2026? It depends on who you are. If you are retiring soon, or you want to protect your life savings from inflation and don't want stress, gold is your winner. It is the ultimate safety net. But if you are younger, or you have an appetite for risk and want to chase massive gains, silver is the play. The industrial fundamentals for silver have never been better. The world is going green and digital. And silver is the fuel for that fire. Many experts suggest a balanced approach. Perhaps a portfolio of 75% gold for stability, and 25% silver for growth. Or, if you are aggressive, a 50-50 split. We are living in uncertain times. The debt is climbing, geopolitical tensions are rising, and technology is consuming resources faster than we can mine them. Whether you choose gold or silver, the most important decision is to step out of the failing fiat currency system and hold real assets. The silver rocket has ignited. The only question is, are you on board? What do you think? Is silver going to hit $50 or even $100 this year? Or will it crash again? Let me know in the comments below. Are you team gold or team silver? If you found value in this video, please smash that like button and subscribe for more financial investigations. Disclaimer, I am not a financial advisor. This video is for entertainment and educational purposes only. Always do your own research before investing. Thanks for watching, and see you in the next one.